Morning, everyone. My name is Cameron Byrne, General Manager of Partnerships and Memberships here at the AFA. I would like to introduce you to today's webinar using practical examples of how the iExtend offer works in real-life client scenarios, brought to you in partnership with iExtend. I would firstly like to introduce you to our presenters today, iExtend's Head of Risk, Ruth Keaney, and Queensland Distribution Manager, Mark Stubbings. Ruth is the Head of Risk, leads the risk assessment team, oversees research, education and policy portfolio management. She's highly experienced in she's a highly experienced life insurance leader with 25 years of underwriting, claims and risk management expertise in Ireland and Australia. Ruth holds diplomas in business and medical underwriting from the Chartered Insurance Institute of Great Britain. Before joining iExtend, Ruth was a management consultant for 8 years, was head of KPMG's claims and underwriting team, was formerly Chief Underwriter and Head of Underwriting and Claims Strategic Solutions at CBA. Mark Stubbings is the Queensland Distribution Manager. Mark has had a lengthy career in financial services across Australia and New Zealand. In particular, he has worked in a number of licensee, financial advice and product provider roles. Recently, he spent 5 years at Sun Super and then a year at Aware Super, where he designed, launched and further developed their respective offers to the IFA market. Mark is a qualified accountant and holds an MBA and a number of financial planning qualifications. Mark is also the state chair of the AFA in Queensland. Before we begin, I'd just like to cover off some webinar housekeeping. Today's webinar has one CPD point available and will send out details within the next week. We will answer questions at the end of the presentation. Please use the Zoom Q&A feature and not the chat feature, as you can see on the diagram on your screens now. I'll now hand over to Ruth and Mark to take us through today's webinar. Thank you.
Thanks very much, Cameron, and really appreciate the very warm introduction there. Thank you. Both Ruth and I are very pleased to be with you here today. And over the last few weeks, we've been working to make this session a very practical workshop on how the iExtend offer works. We're sort of very aware, very conscious that iExtend is a new offer in the market. And it's unique to Australia, it's unique to the world. So what we'd like to do is go over what the offer is, and to particularly look at some real life case studies, which Ruth in particular will take you through. There's nothing like sort of aligning what we do with some very practical examples. What you can see on the screen today is the agenda, and essentially I'm going to step you through that very, very quickly. What we're going to do is recap briefly on the iExtend offer that will build from our first webinar that we had about 4 weeks ago. We'll talk a little bit about our aspirations for the market, why iExtend, a bit of an explanation around the business. We'll talk particularly how the offer works. And then I'll engage Ruth in a bit of conversation around the target market audience for the offer. As mentioned, we're going to focus a lot on case studies today, and we're going to look at 3 examples. We're going to look at a fully co-owned policy, where the policy is obviously co-owned between the policyholder and iExtend. Then we're going to look at a partly co-owned policy, example there. We're also going to look at an example where the policyholder decides to actually keep the policy. And we're also going to look at a 4th example of where the policyholder is not eligible for the iExtend offer. So we're hoping that those real case studies will create a bit of a good discussion point and an alignment with particular clients that you have or advisors have, right? But before we get into the substance of it, I might just defer quickly to Ruth. Ruth has been hugely instrumental in putting the iExtend offer together. And I'd just get her to talk briefly about why she decided to join iExtend. Ruth, would you like to share that?
Thanks, Mark. I started with iExtend 2 years ago, actually, as a consultant, working closely with the CEO. And for me, it was the opportunity to work off a blank page, to apply both my underwriting and claims experience and my industry experience into a longevity style offering. But also top of mind was having a sustainable a sustainable proposition to bring to market, and it being evidence-based and digitally enabled to allow advisors to be at the center of everything, and to self-direct through our pre-assessment online tools. So it's been a pleasure to build something from ground up. Our team's getting bigger, and it's a pleasure to work alongside some great people, including you, Mark, that are passionately committed to helping policyholders keep their cover. And for me as well, it's, for them living well and living with the challenges of chronic health at a more mature age, and helping those policyholders has been a huge motivator for me.
Fantastic, Ruth. Thank you for sharing that. What I'll do is talk a little bit about the iExtend aspiration, our vision for the market. So this is a bit of a recap around what we're trying to achieve. We launched in April this year, and it was very much around filling a gap in the insurance market. And we felt that it was going to be very important to work collaboratively with financial advisors and insurance providers to ensure that policyholders can continue the valued relationship they have with their financial advisor by accessing a new and innovative, but also flexible and alternative insurance option. As mentioned, what sort of really lies at the heart of this is that notion of collaboration. We're looking to work very closely, obviously, with the policyholder, the advisor, and the insurer. Bit more background. iExtend is a private company formed by a group of like-minded individuals who saw an opportunity to help life insurance policyholders retain an interest in their unaffordable, yet very valuable, life insurance cover. iExtend aims to give something back to policyholders who have value in their policy, but have decided to cancel or reduce their cover. But as mentioned earlier, we can only do that through collaborating with the advisors and the insurers. Let me talk a little bit around why iExtend. iExtend provides an option to those who have committed to cancelling all or some of their life insurance cover. And this is essentially where the journey begins. As advisors will know, cancellations or large reductions can occur for a number of reasons. Often it springs out of an aging clientele, and those clients are actually faced with obviously dealing with large increases in premiums on the cost, premium cost on their life insurance. Inevitably, as clients do get older, you find competing priorities around income, cost of living, and capital they want to use for a variety of purposes. Last 2 years have been particularly difficult. We've had COVID and a number of natural disasters, and we're now entering a phase in the economy where there's a lot of pressure on cost of living. A lot of clients who are immediately pre-retirement or post-retirement are obviously balancing up lifestyle priorities, which invariably involves probably a reducing income stream, faced with some increase in costs, particularly around insurance. Another thing from an advisor's perspective is that cancellations or reductions of life insurance obviously have a fairly profound impact on practice revenues as well. Interestingly, currently, the lapse rate for policies across the industry is 15%. It moved down to about 13% during COVID, but is now back up. That has a big impact on the value of life insurance books in advisors' practices, and it can be related very strongly to the age demographic from approximately 55 onwards. So as mentioned, obviously iExtend provides an option to those people who've already committed to cancelling. But when you look through invariably what is faced in advisors, that when the client reaches that point of time where they're struggling with affordability, the first option invariably is to keep the cover, obviously bite the bullet and continue to pay those premiums. Second option is to look at reducing that cover and thereby receiving a reduction in premium. Third option is to look at transferring some or all of that cover and the attendant cost to family and or loved ones. The fourth option, which is the point we're at, is obviously the policyholder has decided to cancel the policy, and arguably that's the worst outcome. The cover disappears, the policyholder receives zero because that's the deal, and now there's another alternative, which is the iExtend alternative. And essentially what we're looking to do, we're looking to assist policyholders to actually hang on to their valuable life insurance cover where they've reached a mature age, and a combination of the affordability aspect and the health conditions have made it either difficult to retain the cover or alternatively to look at another provider for that cover. Essentially, iExtend looks to co-own a life policy with the policyholder and take over those premium commitments from this point onwards, while still providing a claim to the policyholder beneficiaries. Right, let's have a look at how the co-ownership works. Whilst we want people to retain their policies, we understand that often they'll not be able to afford to retain the cover. iExtend will actually assume the cost of the cover going forward and extend the, obviously the life of the policy for the eligible policyholder. If a qualifying client is elected to cancel the cover, iExtend will accept the policy ownership and pay all future premiums, resulting in a zero cost outcome for all the clients on the co-owned policies. For this, iExtend will share a portion of any future claim payment with the original owners on the sliding scale. And let me introduce the sliding scale now. As you can see, based on that sliding scale, and it's very important to note that that's on the indexed amount as well. For the first year, the client will receive 60% if the worst imaginable thing happens. The second year, that is 40%. The third year is 20%. And from the fourth year onwards, there's always an entitlement to 10% of the proceeds. But again, it's very important to reinforce that that's 10% of the index sum, as is borne out by this little chart here, that although the percentage remains fixed from the fourth year onwards, the cover is continued to index, because obviously iExtend will continue to avail itself of the index amounts on offer. Ruth, it might be a good opportunity to introduce a little bit of your wisdom at this point in time. Why does the client actually share in a reduced amount as the policy term increases?
I think from a sustainability perspective and our offering, and we will talk about it in the next slide on the target market, we're expecting to cover people for the medium long term, so that their longevity or their life expectancy is well beyond 5 years, if not up to 20 years. So these co-own shares are much higher than we would expect, because we don't expect to get claims in those areas unless it's unforeseen. And it also allows us to recoup and cover the premiums. But if we go to the next slide, Mark, we'll talk more about our target market, and that will explain it.
That's a good segue, Ruth. So let's talk about the target market there. And this is a bit of a visual explanation of who might qualify for the offer. But Ruth, I'll get you to talk through the component parts there, and I'll just bring up the parts as you do so.
Sure.
Yeah. So you want to talk first a little bit about the scale of health conditions, Ruth, yeah?
Yeah, so on a simpler way of looking at it, on a scale of 0 to 10, we'd say 0 being excellent to good health, you know, standard rates, we'd say, in life insurance, and 10 being extremely poor health, with 9 and 10 with really maybe 3 to 5 years life expectancy only due to chronic health issues. So we wanted to simplify this for the advisors to show where we now sit in the scale.
Excellent. So perhaps if I introduce the next piece there, Ruth, around the two ends of the scale, 0 to 4, 9 to 10. Can you talk me a bit through those elements there, Ruth, please?
Yeah, well, I suppose in life insurance, applicants are at a younger age, often between the ages of 20 to 50, and in reasonably good health. And maybe predisposed later to chronic health as they go that age scale. But so that's 0 to 4. We believe is for policyholders that are in good health and don't need us at this time. The 9s and 10s, again, on that scale of 1 to 10 or 0 to 10, are more for those that are really, really seriously ill, if not terminally ill. And we believe that, ethically, that the advisor and policyholder and their families should do everything they possibly can do to keep that cover. And again, we don't see that as our target market.
Now, perhaps I'll introduce the picture here just around that distribution curve and get you to maybe put some of that information in that context, Ruth, yeah?
Yeah, so again, if you just click the button again, Mark, you'll just see the yellow piece there. Again, this is where we see where we fit. So again, if we look at 0 being, say, standard rates, and you're moving up that's 0 to 4, coming on to 5 is really the life insurer market at that younger age. But where we see chronic health coming in, and this is where we see the gap is between the 5 and the 8, and particularly at a mature age. So our target market is really mainly for the 60 plus age group. We do occasionally see some under the age of 60, so we're not hard and fast on the age of the applicant. We just, for our offering, it fits between that 5 and that 8.
Cool. That's very good, Ruth. Now, might be a good opportunity for us to actually have a look at some real life examples, Ruth, and maybe put again a bit of that real life practicality around client circumstances. So perhaps we've got a case here involving a real life client called Michael. Perhaps I can get you to talk a little bit about Michael's circumstances, Ruth. Would that be okay?
Yeah, sure. These are real life cases, and that we've seen in the last few months. So Michael, 66, 1.2 million cover, fully indexed, quite a high indexation there, and was accepted and underwritten in 2008. In 2021, Michael opted to take early retirement to focus on his health and well-being. And that's where the advisor circumstances comes in, that the policy has now become unaffordable, and he's committed to cancelling. So I think first and foremost, the journey starts for iExtend is only when the policyholder has committed to cancelling, or cancelling fully or partially. So it's not uncommon. We're seeing it constantly that the policyholder is in arrears by the time the pre-assessment is done with iExtend. So the advisor has registered on our advisor portal, and through that registration has access to what we call a quick calc, which is 3 really straightforward questions just to understand and gauge the health of the policyholder. But I think importantly, it's also to get a real-time assessment. So we've digitized the process so that Michael's advisor can quickly work out, does Michael fit into iExtend's target market? In this case, this quick calc was done 2 to 3 minutes with some policy information, and the advisor downloaded our telehealth questionnaire, which we have on the website. And again, straightforward, plain English questions. Importantly, signature free, because we really want the advisor to engage with the policyholder to understand more about their health. And also it linked into our distribution managers, which they're all over the country. So what we had is we were all on alert within minutes that Michael might qualify for cover.
Oh, that's awesome. And it just goes to show that there's some good tools there for advisors to access. But maybe we can now dip into a little bit around Michael's health changes and what were the steps taken to finalise that case, Ruth? Yeah.
Yeah, I think one of the key questions we ask, and we ask it in the quick calc, is in the last 5 years, because we know there is no point asking somebody, have you ever? So asking 5 years gives us a real snapshot of Michael's health. Michael had increased, his weight had increased over the years. In 2017, he developed sleep apnea, which is not uncommon with increased weight for some people. And unfortunately, he cannot tolerate the CPAP machine. He also developed late onset diabetes, and I think the key point of his health challenges was in 2021 when he developed a mild stroke, which had some impact to his mobility. He actually commented that he had ceased driving for 12 months as well. So what this was calling out is if you look back into iExtend risk assessment, it's really about what has changed since the policy was taken out. So the policy was taken out in 2008 at standard rates in good health, and now over time and many years later, Michael has had a change in health.
Very much so. Very much so. So talk us through the steps to what are the next steps, or what were the next steps to finalise this one, Ruth? Yeah.
Yeah, we inputted that information back into the quick calc, which we call the pre-assessment calc, and that confirmed to Michael's advisor again that he may qualify. But part of our risk assessment, and particularly for sustainability, is that we actually get a copy of medical records. But the first thing we always do is get privacy consent, both from the advisor and from the client before we proceed any further. So we're now understanding the client. We have a name for the client. Prior to that, we had no name, and we use DocuSign, which we find is terrific. And Michael proceeds to actually, it was fortunate in this particular case, Michael had some copies of a pathology or hospital report from the stroke episode in 2021, and he provided that to us, which really sped up the case. Because just remember, this was in arrears and we just didn't have much time to make this decision. So we have to be flexible, albeit we're evidence-based, but we have to be flexible with the information. So talking to his spouse, which is part of that education process prior, he agreed to a co-ownership arrangement, and we helped with the administration processing for the memorandum transfer with the insurer, and fortunately it was completed in 14 days. So we got in there before the policy lapsed, which was good.
Oh, that's sensational. And Ruth, just one bit on that, the privacy consent forms. What are the client and the advisor actually consenting to with those forms?
This is really critical for us. We call it consent for commitment, and it really is commitment. So it's commitment from the advisor, and that if he or she has information to share, that they have permission to share. Commitment from the policyholder to permit us to have a tele-interview if that would speed up the process. And the third commitment is the medical records. We don't ask for any intrusive tests or anything like that, but we do ask for a copy of medical records. So that has to all happen before we can progress with the co-ownership.
Excellent. Hey, good case study, Ruth. Yeah. And now I might move on to the second one, which is a little bit different, because this is the situation, and I guess the question is, can you part own a policy with iExtend? So can you have a part co-ownership sort of arrangement? So perhaps I can just get you to run through the client's circumstances for Mary in this case, Ruth. Yeah.
Yeah, sure. Well, again, Mary had committed to cancelling. In her case, she'd committed to reducing her cover, and on based on what she could afford at that stage. So she had, with her advisor, decided to retain 100,000, and again, the policy was set to lapse within the next 3 to 4 weeks. The advisor, prior to doing the pre-assessment with iExtend, had looked to try and rebroke the cover with another life insurer, and Mary had gone through the underwriting process, and unfortunately, due to health changes, actually it was the final premium was dearer than her current policy premium. So that affordability remained, and she was then committed to cancelling. So again, time was running out. The advisor got on to us quickly and said, can you do a complimentary pre-assessment? So I think the point is we're committed to helping policyholders to do complimentary pre-assessments, and also that the flexibility of that to co-own part of the cover is very much iExtend's proposition.
And Ruth, can we just drill down a bit on some of the health issues that Mary had, how it changed in the last 5 years? Yeah,
Mary developed stage 4, which is an advanced stage of breast cancer, and she had successful treatment with chemotherapy and a mastectomy, and she's been in remission for 2 years. So that's her health changes from point where she was. She also takes blood pressure medication, which is not uncommon for someone of that age. But I think the main change in Mary's health was the breast cancer, and that's what the underwriting loading would have been from the insurer as well.
Okay. And Ruth, can you talk us through how it played out in the end? Yeah.
Yeah. Again, we went and got the consents, which we do on every single case. And in this case, Mary didn't have the medical records herself, so we requested a copy of medical records for the last 5 years. Again, just zoning in on what we need to know, and no more, no less. She met the co-ownership criteria. So if we think of that target scale of 0 to 10, Mary was sitting in around the 7 mark. So if I just give you a sense of mature age, has developed chronic conditions, and so she was fitting in with our market. Mary decided to again keep the 100,000, and so we were able to facilitate that, where she pays a portion herself. But she also, the advisor said that he'd be reviewing it in 12 months' time again.
Excellent, Ruth. That's a very good example of sort of having the client very seriously involved through that retaining a portion of the cover, Ruth. Yeah.
Oh, I think so, but it's also that change of health and just the difficult that there was no option left for Mary, and that's that advisor took that last option to pre-assess. I think the speed of pre-assessment is very important as well. That time is running out. It's not like an application for life insurance. Time is running out, and we need to understand the changed health. And fortunately, the advisor had a good understanding of the changed health as well.
Excellent. What we might do, Ruth, is go to, and some of these cases are quite contrasting, but if we can go to case study number 3 here, and this has got a bit of a twist in it. When this one came across your desk, it had the twist that there was a TP rider benefit involved as well. So can you chat us a bit through not only the client's circumstances, but how they wanted to sort of deal with the life cover piece and the TPD piece, Ruth? Yeah.
Yeah, so this was a request for actually full cancellation. It started and the client had committed to cancelling, and they'd confirmed to us they committed to cancelling. So the advisor provided additional education on which we provide in our educational tools on the website on how it works for policyholders, and took his client through that. we obtained the privacy and consent forms to start with the complementary risk assessment. And we'd also seen the change of health that Peter had with his diabetes and a mild heart disease, and also his increase in weight. So in a sense, he was fitting the target market. He had committed to cancelling, and his policy with life and TPD, he was at that stage considering dropping that TPD as well.
Right. Okay. All right. So interesting set of circumstances. Can you talk us through the outcomes from those discussions you had, Ruth?
Well, I think going through the education process and just taking the policyholder taking his time and spending time talking to his partner, and we've seen this in a few cases, and we sent the co-ownership deed, again, taking his time to review it. He actually decided to keep the cover and for this year, and a positive note from the advisor that if the situation changed, that he would like the advisor to contact iExtend again. So I think the awareness we brought to Peter on the value of his cover came through, and it's great news for the advisor as well that he's to retain that policy.
Yeah, it's perhaps worth feeding it, and you've touched on it there, Ruth, that talk a little bit more through that advisor feedback, because it seems like a really good outcome for everyone. Yeah.
Oh, I think so. Our premise has always been that we're here to help people that have committed to cancelling, and if there's any risk that they're not committed, I think we want to take that time to go through it. So I think the advisor was grateful for the service we provided. And he knew he'd done everything he could as well. And so Peter has let the rollover go for his policy, the new rollover up for his TPD for another year. And like he's 64 years of age as well, he wanted that to go up to the limit on the TPD for another year. And I think that was something that he hadn't thought too much about until further down the track. And again, the advisor has diarised to have that discussion when the TPD falls off, when he goes over 65.
It just sounds like a really good outcome for the client and the advisor, yeah?
Oh, I think so. And I think, again, the speed of our assessment was helpful, that they were able to get a decision or a pre-assessment really, really quickly and not go through too much trouble, but also explaining and educating on our offering, I think helped him see the value.
Excellent. I think that's really, really good. So this is a really interesting one, Ruth. So this is one where we're going to have a look at a client who's actually ultimately not eligible for the iExtend offer. Medical conditions are well controlled, but can you talk through June's circumstances, and then we'll start to delve in a bit more around the other elements of it? Yeah.
Great.
So first up, do you want to just talk through the client's circumstances, Ruth? Yeah.
Yeah. So June, life and TPD, she'd taken it out in 2013, and she had a 50% loading on her policy, and she had committed to cancelling. So we went through the risk assessment process because, and we encourage advisors to use our tools and to test suitability, eligibility for as many or all of their clients at the point of cancellation. So this was one situation.
Now, June had actually made that decision, I think, to cancel her life insurance, Ruth. So interesting point here was rebroking the policy with another provider. Was that a possibility as well in this case?
Well, this is interesting because she didn't really see the value, we believe, in her life and TPD. Again, we don't give advice or any of that, but and she was close to retirement, so she'd made that conscious decision to cancel her cover. And again, our journey doesn't start until there's the commitment to cancel. So the advisor circumstances stay with the advisor. And also, which is interesting, the advisor had helped June through a workers' compensation claim. So he had a good understanding of her health. And having a good understanding of her health, we agreed to do, or I did, a telehealth interview with June just to try and understand her current health situation. Because think of it, we're looking at longevity and life expectancy, which is not necessarily disability, a workers' comp claim, and that can get confused sometimes with some of the cases where it may seem that the client is in poor health, but maybe in quite better health than we think.
Okay, now that segues again quite nicely into Ruth's Freudian slip, June's health conditions over the last 5 years. So could you just talk a little bit about those, please, Ruth? Yeah.
Yeah, so June had indeed a workers' comp claim, but it was for musculoskeletal back and neck issues, and she was on medication following a fall. She went for a checkup, and she was diagnosed with late onset or type 2 diabetes, and takes 1 Diabex tablet daily, and also she's been recommended, as not uncommon with people with diabetes, to keep their cholesterol and the blood pressure as low as possible. Fortunately for June, she's lost some weight as well in the last 2 years. So all in all, looking at June's health, but you have to think about her age, and is her health reasonable for age? So that was one of my key considerations. So in a scale of 1 to 10, June was sitting around that two mark, which is in reasonably good health for her age. And I think the call out here is with diabetes, it is so much earlier diagnosed in Australia, and with subsequent weight loss and activity, it can be reversed. And in June's case, her diabetes was under 5, her blood sugar level. And so other than having disability type risk, she was in pretty good health.
Excellent. So how did this play out, Ruth? What was the outcome of obviously a fairly sort of extensive examination of June and her health history? How did it play out?
Yeah, well, we believed June went ahead and cancelled her cover, but as a courtesy, which we do on all cases, we try to, particularly if you've gone through a telehealth or we've got medical records, is we send a letter just to explain our target market, and it can be a good thing to do to explain to policyholders, particularly going through that may be vulnerable, going through financial or other difficulty, to explain how we came about our assessment, and she wasn't eligible at this time. So we do that, and I think it's very important that we do that for advisors and policyholders. It might not be a good outcome for June, but at least she can understand that how we assessed it, and the advisor said, it's great to be actually explained to a client, hey, you're in better health than you think. And so
I don't think the client's going to be unhappy to receive that news, but did it raise and look, we touched on it a wee bit earlier, that the idea of rebroking the cover because obviously the health conditions were manageable. Was that something that June could have done? Could she likely have gone to the market and been able to replace the cover? Yeah. Yeah,
absolutely. And thanks for reminding me, Mark. So in my letter, I actually did like a forecast pre-assessment as well as her potential eligibility. Again, not giving advice or anything like that, but to potentially, rebroke it. Getting diabetes under control at mature age is typically standard rates, and she has lost weight. So, she's got a 50% loading on her policy. So there could have been a possibility there, if June was interested, to look at another contemporary life insurance offering, and possibly at a reduced premium rates. But I think the call out was June was committed to cancelling.
Yeah. Okay. Look, I think that was again a very good example, but also it demonstrated how actually going through our process potentially created another outcome for the client, which was if they decided to retain the cover for whatever reason, our sort of assessment of their health conditions means potentially they could go to the market and look to rebroker the business elsewhere. Yeah.
I think my team and I, our risk assessment team is, we've got a lot of experience here, and we think it's important that if we can identify anything that is positive for the policyholder, that they may be actually in a different health situation at a different age. So we can work on the reverse, where with June was when she took out her policy, she wasn't as healthy as she possibly is today because she's controlling her medical conditions. And I think the other call out is that diabetes can be very well controlled in a late onset stage at an older age as well. So
that's encouraging.
It's not overly chronic. Yeah.
That's very encouraging, Ruth. So thank you for all your input on those 4 case studies. And I think they sort of demonstrate the diversity and widespread of cases that we get to have a look at, and how we can add meaningfully to each of them. Whether iExtend takes the offer on or not, we can actually contribute to an overall good outcome for the advisor and the client. Yeah?
Yeah.
Okay. Thank you, Ruth, again for participating in those case studies. What I want to do now is just reflect on 6 very important takeouts from what we've discussed today. And the first one is iExtend does not get involved until there is that very clear commitment to cancel, right? And I think it's important to stress that as the precondition. But I think also what you, the audience, will have already concluded that with the cases that we've looked at today, it actually creates options for your client. Although one of the options is obviously to pass the policy over in part or in total to iExtend. You'll also see that the medical examinations, the diligence of what we go through, can create other options for clients maybe to rebroker or even hang on to the business, which I think was a good reason for us using those examples. It also leads in well to the points around that understanding what iExtend does. Using those examples we did around longevity, so you get some understanding of where people sit on the longevity scale. Understanding the policy, the yearly renewable policy, yearly renewable term type policies that predominantly we look at, but also the client's health circumstances, because when you dig below the surface, there can be an awful lot of interesting and very relevant information that can be brought up. Fourth option there, or the fourth point there, is around premium cost. Obviously, life insurance, the science has got better as the years gone by, and some of the older, less contemporary policies can be a lot more expensive than some of the newer, more contemporary policies. So the ability to be able to establish the client's eligibility to rebroker can actually be quite a valuable part there. So looking at premium cost and the client's circumstances in 3 can be a very important part of the advisor's due diligence. Ruth's already touched on point number 5. We've built a fairly extensive website for iExtend. A lot of that material is in real time, so you can access it now. But also there's a lot of pre-assessment tools. And one of the most important one is that quick calculator. You have the ability to register on the site, use the quick calculator, and the quick calculator can give you a quick ready reckoner of whether the policy that your client has, that they have already decided to cancel, is in actual fact a good candidate, and then it can precipitate the discussion with iExtend. The 6th and last point, and I guess this has been brought up by Ruth's consideration of the cases today, is that actually knowing about your client's health circumstances, that's not always plainly and readily obvious, but if you have that discussion with the client, you can get some sense of where they sit on that health scale of say 1 to 5, which is really important. So we reckon there's 6 really strong takeouts from today's discussion. So where to from here? What we would like to do is, before we enter into the Q&A segment after this, but if there's anything particularly that you'd like to talk about that you don't raise in the Q&A segment, or indeed it raises more questions, please reach out to Ruth or myself post this webinar. We're happy to help you through. It's not a big issue. Secondly is register on the website. There's a very, very easy registration process. But more importantly, once you register on the website, it enables you to access a whole lot of the resources there, including items like the quick calculator. We've got another webinar, the 3rd in this series of 3, the final one, which is on the 6th of September. And we're already beginning to think about some content there. We're thinking about vulnerable clients, which is a category that's come up in some of our internal discussions. We're also thinking about cases of business insurance, so key person, share purchase style covers, and we're thinking through some further case studies around that. We're going to have a very large presence at the AFA conference in September. So AFA is rolling through the Gold Coast for its national conference at the pretty much the 3rd week of September. iExtend will have a large presence there. So we look forward to catching up with you in person there. And also to remind you that we have representatives in all states across Australia. So we can obviously provide the connection with the person, the team member who's closest to you. And this point, I think, was well made. We are all about collaboration. We really are absolutely keen to work with advisors and their clients. We'd love to stay in touch, and hopefully the points that I've just run through gives you some touch points to either Ruth or myself. As I say, we join the dots to the team. All right. So what I might do is I might take a pause there and pass back to Cameron so we can field any questions that have come up during the course of it, Cam. Yeah.
Yeah, thanks, Mark, and thanks, Ruth. So there's a couple of questions come through. Are you going to cover how the payout process works and what the client is entitled to in each of the case studies? So I think the answer to that is no, but I know from the first webinar in the series, which is available on the AFA website, it does talk to the percentage or the payouts through the different years as they progress.
And I can flick back to that, Cam. And hopefully this will actually answer the question that the person has asked. But if we look at the scale there, there's very much from the point of time where the policyholder enters into that arrangement with iExtend, that and Ruth made this point very, very well, I think, that we're not looking to take on people who are literally going to pass in the first 3 years. That's not the intention, right? The best advice that we can give to those people and to the advisor is hang on to that policy, right? Because if the person's life expectancy is very, very short in that 1 to 2 years, the best advice the advisor can give and the counsel that we'd likewise give is that hang on to the policy. Policyholder, or more particularly their survivors, will get 100% of the proceeds, right? So we're not looking for those short-term lives. However, we do recognise that sometimes stuff happens, right? And with the best of intention on our part and obviously on the policyholders and advisors' part, something untoward could happen in those early years. And I guess that's part of the mechanism there is that if something unfortunate and unexpected does happen, there's a higher proportion of payout in those first 3 years. But the expectation is that won't happen, but just in case it does, right? Essentially, that's why we always sort of focus more so on the 10% of the indexed amount. And I do stress the indexed amount because we're assuming that the client will live for quite some time. So Cam, I'm not sure whether that answers the question, but or whether it's precipitated another question. But
yeah, I
back
think
to you.
it's
Yeah.
I think it covers the basics of the payout percentage. So, Ruth, question for you: have there been any claims paid? And I think the second bit of that, the proportion paid to the beneficiaries, Mark, you've just covered off. So, have any claims been paid out by iExtend based on the co-ownership?
Well, we're only going 7 months, and our, from the assessments that I've done, our average, and I say the word average because nothing is certain, our average cohort of life expectancy longevity is between 12 and 15 years. So we're seeing our policyholders having, based on their health circumstances, falling well within our target market. So we're not expecting to pay for a couple of years, but something, as Mark says, unforeseen could happen. Yeah. And because we are here for the short, medium, and long term, the medium and long term is our people are living well, but with chronic conditions. So the answer is no, and at this stage.
Yep, okay, and another question's come through, probably a little bit difficult, but can you use your case studies to explain what the premium saving is for a client in reducing their cover to say 60% versus what they'll be paid at the current rate, at the current level, and use iExtend? Well, I'm assuming that would be if they reduce their cover to 60%, they're only going to be paying 60% of the premium.
Yeah, it's proportionate. It's percentage proportionate. But I think we could, for whoever put that up, we could take that offline if there is a particular case that they're looking for some financial projections. We can do it on a case-by-case basis, based on their proportion that they're keeping or not. So if that person would like to drop us a line, and we can further explain that.
Yeah, okay. It's a very good point, Cam, that often, and one of the case studies demonstrated as well, is that the client might not want to relinquish all of the cover. We get that. So there's an opportunity, obviously, for the client to retain some of the cover and pass the amount that they want to effectively cancel, pass that balance over to us. And effectively, they've retained a portion and they co-own a portion with us, which can dramatically reduce their, depending on how much they retain, but it can dramatically reduce their premium commitment as well, while still giving them an entitlement plus the co-own piece that they have with iExtend. So it can deal with two things. It can deal with that affordability issue as well as maintaining a necessarily level cover to beneficiaries can. Yeah.
So Cameron, just in that case about, one of our case studies was with co-own cover, and the person decided to keep 100,000. They're entitled to 100,000. That is their claim, their portion, and this is the co-own portion that has this scale, this sliding scale. So 100% of what they retain, obviously, is theirs, and we co-own the balance of that if they choose to part co-own with us.
Yep. Okay, thanks, Ruth. Another question has just come through. At annual review, can beneficiaries change?
The answer is yes. We invite our policyholders to renew on an annual basis, and we have a nomination of beneficiaries option within our policy schedule as well. So if they wish to change their nomination of beneficiaries similar to a life insurer, we can accommodate that.
Okay. No more questions have come through. So on behalf of the AFA and our members, Ruth and Mark, thank you very much for your great webinar today. For participants, you will receive your CPD certificates for this session in about a week's time. As Mark mentioned, we've got the AFA conference coming up, so it may take a week, close to that week, or even a touch over. I know that our CPD team get them out very quickly and they're very efficient. So the webinar will be available on our website. Again, there'll be an email go out on that one when it's available. So if you want to review it or have some questions that you may want to raise with your local BDM, I know Mark looks after Queensland, and I saw Ian Knight He's down in Victoria, so reach out to those guys or look at the iExtend website. And if you've got any further questions, please reach out to the AFA. So thank you for joining us today, and hopefully we'll see you all at the AFA conference in September on the Gold Coast. Thanks, Mark. Thanks, Ruth.
Thank you.
Thanks, Cam. Thanks, attendees. Thanks, AFA.